I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Great to be on the show.
Hilliard, the Bank of Canada governor making some interesting statements to the credit unions of Canada about what's happening in the real estate industry. One of his statements basically said the reason real estate prices have come down is because Canadians willed them to come down. Is that a very accurate statement for a governor of the Bank of Canada to say?
Well, it certainly got a lot of reaction. So I was looking at the actual wording because it was people were really going to task over it on Twitter, and so I wanted to check. And so really, his argument it seems to be some research that was done by the staff, and now Governor Pelosi is the guy that said that Vancouver real estate will always go up because of the mountains and the ocean, right? He was in one of those moods, I guess, but the staff did a more scholarly research, I guess, and they discovered that it isn't immigration, it isn't interest rates, it's whether people expect prices to rise or not, which actually is sensible. So if people are expecting prices to rise, they go up, and then if people stop expecting prices to rise, then they go down. So this is, I know it sounds kind of simplistic, but that's more or less what the research showed. And they were looking at it from 2015 to 2019. So that's really too short a period for anybody to be able to draw any conclusions. Then you really need to go back to the 1990s and 1980s. But that's what they did, 2015. So he basically said, so what happens is when people stop expecting prices to go up, prices level off, and then he used the word froth. So he said the markets were really frothy, and when they stop expecting prices to go up, then the froth gets removed from the market. And it's kind of like he's saying, well, he actually does say it, I'm paraphrasing, that means that everything's going to be okay now. So kind of like you've got this massive bubble. House prices have literally tripled, well, more than tripled in Vancouver, and tripled pretty much on average in the rest of the country in the last 19 years. And so what's going to happen? We're going to have kind of a slight drop on the averages, and you and I know that we've been talking about some much bigger than slight drops in specific areas like West Van. But on average, the prices have dropped to 5 or 10% kind of thing. And that'll take the froth out of the market. And people's expectations will no longer be that prices will go up. They'll stop expecting prices to go up. But then he draws the conclusion, and I don't think his staff would have put this in their research, that prices will level off, and then everything will be fine. And of course, we know, because of the amount of debt that's in the system, that that's not what's going to happen. That when prices stop going up, there's too many people that need the prices to go up in order to refinance their mortgages, to keep their car loans going, to keep their credit cards going, that they'll get into financial difficulty. There'll be a recession, and then prices will go down. They won't just stop going up, but they'll actually go down. And that's what, unfortunately, the bad news is that's what needs to happen. The good news is that after the prices go down, we will see affordability restored again. But it's not going to be restored just through a leveling off or removal of the froth, as the governor is saying. It's going to require more than that.
With prices in Canada going down, despite some local real estate associations say, is there still a need for the B20 stress test?
That's a great question. There's a lot of lobbying going on right now. So originally the banks were quite happy that the B20 came in. The banks are the biggest players by far in this system, and because they felt it was going to affect the alternative lenders like Home Capital, Equitable, and some of those other people more than it was going to affect them. But apparently it's starting to bite on them, because there's been several reports from economists employed by some of the largest banks saying that, maybe the B20 guidelines went too far and they don't need them anymore. So it must be, well, you can see it in the lack of growth in mortgages. The mortgage growth is sort of down to 3% or even lower on an annual basis, which is way too low to support the housing bubble that we have. And so the banks are starting to feel a pinch. So there's a lobbying effort underway right now to say that the B20's gone too far and they should relax it. So one of the ways they could relax it is they could say, well, instead of getting stress tested at 2% above the going rate, you could get stress tested at 1% or something like that. So they may make that tweak. I don't know, but I don't think it's going to make any difference to what's going to happen over the next couple of years. We're going to see the correction has started and it'll continue. And it doesn't really matter what they do with the B20. I was in a Vancouver branch of a major bank 2 weeks ago, and I asked them the same question that I asked them 3 years ago, which is, I described a young couple and gave their incomes as being in the 150 to 200 range, and I said, what could they borrow? And I might have told you this at the time, I can't remember. Anyway, the guy said, $1 million, no problem, depending on the down payment. So I said, well, we could help him with the down payment. And he said, $1 million, no problem. So I was at the same branch. I didn't see the guy, his name was Gary. I didn't see Gary, but I saw a more senior person. And I described the same situation, except now their incomes are more like 200, combined, obviously, family incomes, more like 200 to 250. And I said that Gary had said $1 million, no problem, and the answer was, no way, that we don't do that anymore. They said, Gary is no longer with us, and we don't do that anymore. So that was the answer. So, and that's got nothing really to do with B20. That's just what is expected, and that's all it takes is for the lenders to see that house prices aren't rising anymore, and to the extent that they were lending based on equity in the home rather than incomes, if house prices are rising anymore, then there's not going to be any increase in equity, so they can't lend on that basis anymore. The other term for it is asset-based lending, and so once they stop thinking that way, then the size of the loans comes down substantially, and that's the point that we're at now.
We'll have more with Hilliard MacBeth right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, are foreclosures up?
So the story on foreclosures was, we heard about that in the Vancouver Housing Conference that I spoke at a couple of weeks ago. So far, the foreclosures have not really jumped. The people coming in to see the insolvency trustees has jumped dramatically, both in Ontario and in Vancouver. The speaker they had obviously was from Vancouver, but I know some of the people in Toronto, and they've never been busier. So, but it's up to the lender whether they foreclose or not. And so far, there hasn't been a huge huge jump, but it's coming. There's a bit of a lag. Actually, somebody pointed out, I didn't realize this, but there's actually a several-month lag in reporting. So in order to find out if foreclosures are increasing substantially, you'd have to go down to the courthouse and check the filings every day, because by the time it gets actually reported, and I forget what they said, where it gets reported, it can be as, if we're in May now, you might see February's numbers coming out pretty soon. So, but they will be, and of course, none of the lenders want to foreclose. They would. It's terrible for them when they foreclose, because what we saw in the U.S. 10 years ago when it happened down there, the prices you get when the lender forecloses are terrible. They get if the average home is down 30%, a foreclosure is down 50%. Because as soon as people see foreclosure, then they start bidding really low, and because they think that the lender just doesn't care what price they get. They just want to get out of the thing. So now what happened in the U.S. was they got a whole bunch of very big investors, mostly hedge funds, that came in and bought up a whole bunch of the foreclosed homes really cheap, and then they put them up for rent, and they're still owned to a large degree by the hedge funds, and they're still available for rent. But I don't know if that's going to happen in Canada. Nobody knows how this is going to happen, because this has never happened before. We don't know what the lenders. I'm sure the lenders themselves don't know what they're going to do, but because the foreclosure is kind of like a last ditch resort. I think they'll try everything they can to avoid it. But I just saw a report this morning from Alberta that the second largest chain of liquor stores in Alberta has the lender, which is the Alberta Treasury branches, has called the loan. So they had two loans. They had Alberta Treasury branches, and then they had a what do you call them? I can't think of another term than loan shark, but they're not loan sharks, but they're these
private money placement.
Yeah, these private lenders that are, the interest rate on the loan was 12%, right? So, and interestingly enough, it was actually the Alberta Treasury branches, the government-owned bank, that put them in the receivership. Usually it's the private lender that'll put them in, and the reason the private lender does that is because they want to foreclose before all the equity is gone that they might be able to recover, because if things start to slide, usually what happens is there's never enough for them to get any money back. It all goes to the first place lender, which is usually a bank, right? So often it's the private lender that acts more quickly, and the public, and also the public lenders, the ATB or the bank, they're much more bureaucratic in their approach, and they move much more slowly, right? So, but that's how bad the economy is in Alberta. If liquor stores can't keep their sales up, that's really bad. Like, the people always used to say, well, at least liquor sales will go up in a recession because people have more time to drink, but apparently didn't work in this case.
We'll have more with Hilliard MacBeth right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, you have some personal experience here with this case where West Vancouver, the priciest real estate in Canada, and we should explain that in the Lower Mainland, there's 22 different municipalities. The city of Vancouver, West Vancouver is its own municipality. It's on the opposite side of Burrard Inlet. And that's where most of our professionals, the doctors and lawyers and Chinese billionaires live. What can you tell us the story about what kind of price drops have happened there?
Well, it's just spectacular. So, first of all, the location is spectacular. It's, there's a view of the many of these houses have an unimpeded view of the ocean or the downtown of Vancouver. Some people like to be further around the corner towards Horseshoe Bay, where you don't see the city, you just see the wilderness of Howe Sound and the ocean. But other people like to have a view of the high rises in downtown Vancouver. But in any case, there's a lot of spectacular homes, and what's been happening is people have been tearing down the old homes that were there and building brand new ones. So that one of these, so I was at the Vancouver conference, and there was a realtor there, and he said, we were sitting at the same table early in the day, and he said, look at this thing just sold for $5.5 million. So he passed me the listing, and it was listed at $9.5 million, and it sold for $5.5 million. But the last sale, it was $11.26 million. So somebody took an absolute disastrous bath on that one. And what that was pretty much a brand new home. So the home was built in 2015, has 28 rooms, has a pool, beautiful pool. It has 1.1 hectares of land, which is about 2 acres. It has an unimpeded view of the ocean and a bunch of other features. It had 3 kitchens. I don't understand why it would have 3 kitchens, but anyway, it does. And there's a whole bunch of them like this. Some of them are just brand new, never been lived in. Now, I don't know if this one had actually been lived in or not, but and so anyway, I tweeted that out at the end of the conference, and then I wrote it up in my weekend note that Friday, and people really picked up on it. So they found out that it was owned by a corporation that was registered at a law firm in Toronto, and then a strange thing happened. The seller didn't register the sale, and luckily I checked with this realtor. I actually phoned him before I put it out and said, are you sure this thing's sold? Because it's not registered on the MLS. He says, no, absolutely, I'm sure it's sold. And it took the realtor about a week to register it for some reason. But it was registered to a corporation using a Toronto law, one of the biggest law firms in Toronto, McCarthy, Tetro. And then it turns out the beneficial owners, when somebody did the search, were 2 people with Chinese names. So at any rate, somebody, there was a suggestion that might have been some kind of a settling of a debt or something, but who knows. But anyway, I have no information about that. But so I asked another realtor, I said, so if that's a special case, like for a house to go from 11.26 down to 5.5, can you ignore that when you're talking to buyers and sellers in that neighborhood, in British Properties as it's called? He said, no, you can't ignore it. I mean, you can't say that's just a one-off transaction. That sets the market level. And so when you think about it, all the homes have to adjust. So the $2 and $3 million homes have to recognize that probably a much more substantial home with way more land and a really good view is sold for 5.5. So they all have to adjust their expectations downwards. And in fact, there are some pretty big homes in Edmonton and Calgary that are listed in the range of $4 and $5 million, but they don't have the location that this one has. So it'll affect homes in that category as far away as Edmonton and Calgary. So that's probably why it got such a big play on Twitter. And so I was kind of holding my breath because I thought, oh, what if that information I had wasn't correct? But it turned out it did get registered as a bona fide sale about a week after I reported it, so I could breathe again.
Yes, and when it comes to these high-end homes, I mean, each one is totally distinct and individual. You know, how big is the swimming pool? Where is it located? How big is the garage? They try to compare one house to another. Isn't that almost impossible?
Well, it is, and the other thing is that they're just, like, this is something that just puzzled me about this whole thing for the last, and one of the reasons why, the first edition came out in 2015 was I just knew from my 40 years in the investment industry, there just aren't that many people that can afford to buy a $5 or $11 million home. There just aren't that many. And people said, yeah, but people coming from China and all that. Yeah, but still, the people coming from China, their first pick is Los Angeles. Their second pick is San Francisco. Their third pick is Seattle. Vancouver used to be the third. Now Vancouver's been bumped to fourth. So they got a lot of choice. There are a lot of, fairly new millionaires and even billionaires in China, but they don't have to go to West Van.
And now we have a 20% foreign buyer tax.
Yeah, and then on top of that, you got a foreign buyer's tax, so they can look elsewhere, and they do. And so that it just, you really need the local support. And I don't even know how you'd calculate it, how much income you'd need to actually be able to afford a $4 or $5 million home, but it's got to be in the $1 million range, probably at least. And how many people in Vancouver? So the average household income in Vancouver is $65,000. The average household income in Canada is about $75,000. The highest in Canada is Edmonton, Calgary at $100,000. There's very, very few people that have a household income of $1 million. Maybe 2 doctors, maybe, but all of them own homes already, right? So it's kind of like so it gets worse. So there's about 250 homes in West Van, including British Properties, Horseshoe Bay, all those places, Marine Drive, listed at $4 million and higher. There's over 750 homes in that category listed at $4 million or higher in Greater Vancouver. So there's a lot of people that have to show up to buy these places, and I just don't know that there's enough people that have that kind of income. I think a lot of it was based on speculation and money laundering, perhaps as well. The next time we chat, hopefully the report will be out on using housing for money laundering, and we can know more about that. But other than that, if you just rely on the local people and do they have the incomes and whatever, it just doesn't. The numbers don't add up.
Well, we do have some class warfare taking place here with the NDP government taxing vacant homes and so on. If you have a second or third home, maybe a vacation property, they're taxing you heavily for that. They expect you to either live in it or have somebody rent it. Even if it's an uninsulated cabin up in some wilderness area, they believe you should be renting it all year round.
Yeah, I just talked to a client, and he's got a home on Vancouver Island, and he just listed it for $2.4 million. He's going to sell it. He actually doesn't have to pay the vacant home. He's not there very often. He's there for like 2 months a year or something. Because he does have some tenants in a suite in the home, and apparently that exempts him. But so they're hoping it'll sell to some rich Albertan. I guess Albertans aren't that rich anymore. That's another thing to talk about, is the new premier in Alberta and how he's going to try and turn things around. And there's a lot of optimism about it, but I don't know. It's going to be tough. So they may not have the desire to buy expensive homes in BC anymore, or they just may not have the money anymore to do it.
Well, according to Bloomberg, the federal cabinet is expected to approve the pipeline expansion. Are people in Alberta really keeping their fingers crossed here?
I think they've gotten to the point now where they don't even believe it. And I saw the report. It said it was actually Josh Wingrove, originally from Edmonton, Alberta. I remember when he was in high school, and he's now a reporter in Toronto or New York for Bloomberg. And he filed the report, and he said June 18th or June 19th is the decision date, and they're expecting that it will be approved. Now, does that mean it goes ahead right away? I don't know. I'll try and find out, but that's only like a little bit more than a month away. So that would be a big improvement for sure, because that anecdote about the liquor stores is one thing, but in general, people are getting very discouraged about things in the economy in Alberta, and they're looking for a more optimistic tone. And the new premier maybe will be able to add that. If it doesn't turn around, they're going to look for somebody to blame, and they've got lots of candidates. They got the government in BC, the government in Ottawa, and a few other. And they're upset about the pipeline didn't get approved to Eastern Canada, the Energy East pipeline. So they've got lots of people to blame, I guess, or to vent their anger. But
yes, I know politicians love to blame. Few come up with solutions.
Yeah, it's I actually tried to say to one person last night, foolishly, I tried to say, well, Stephen Harper tried, Justin Trudeau tried, previous Alberta premiers tried. It really wasn't any of their faults that the Keystone Pipeline didn't get approved. It wasn't really their fault that the Energy East didn't get approved. It wasn't anybody's fault that Northern Gateway didn't get approved. And you know, some of them, everybody's trying really hard to get the Trans Mountain expansion approved. But anyway, it was foolish of me to try and make that argument because I got shot down pretty. They want to blame somebody, and so they're ready to dish out the blame.
Well, I was going to say polls show Quebecers would love to use Canadian oil instead of Arab oil, but their politicians are opposed. Should Alberta fund private investigators to find out if these Quebec politicians are on the take?
Yeah, I think that that seems very unlikely to me. I think that there's a lot of opposition to these pipelines, and I don't know that it's particularly well researched or well founded. But I think it's just we saw today that the Green Party won in Nanaimo, and I think there's a significant number of voters that are turning against petroleum and oil and pipelines and tankers, and the way democracy works is they're supposed to reflect what the people think, right? So, or I guess what they think the people are going to think maybe a year from now or whenever the election is. So the politicians are, I'm sure, very actively weighing all the different options and seeing what policies would be best, and they got to weigh what's good for the economy, and also, but what will allow them to get reelected. And sometimes it's pretty impossible to balance everything. So I don't know. I wouldn't want to be I don't think it's a very good time to be a politician. It's gonna be like there's just so many people so angry all the time now. It's just it'll be interesting to see what happens on June the 18th. If the pipeline gets approved, will people be happy? I think that was your question, and your question was, did they expect it? But the next question after that is, if it gets approved, will they be happy or will they still be upset? And I don't know.
Yeah, and I worry about eco-terrorism. If it's approved, will people try to blow it up?
Well, yeah, will it get built? So it gets approved. The contractors move on to of course it's 1,000 kilometers long or longer, but could be sabotage. That's right. So it's
although you could use drones to patrol it.
Yeah.
Apparently Canada's a leader in it, except our armed forces doesn't use them.
Yeah, but it's, I don't know. It's a very, very difficult time. There's a lot of uncertainty, and Canada's struggling right now on a lot of fronts. So, but at least we have one good thing going for us, where our temperatures are cooler. So if global warming continues, we'll become the most attractive place to live in the world in 100 years or so.
Well, we already have palm trees on English Bay in Vancouver and down on the New Westminster waterfront, so maybe palm trees everywhere.
All right.
Hilliard, thank you so much for speaking with us.
Nice to talk to you. My
guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet, our YouTube channel, Talk Digital Network. If you have questions for Hilliard or any of our other guests, you can send them to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.